But what you really want is someone with a mind of their own.
Pondering over which shares to buy or sell? Independent analyst Frans de Klerk brings you an entertaining half-hour discussion on technical share analysis while helping you make a call on which stocks to hold and which to possibly part ways with.
If you do a momentum trade, take a 4% or a 3%. 1% for brokerage, 2-3%, a quick in and out, and bank your money, because we never know when the market is going to correct.
That's Talking Technical on Thursdays weekly on Business Day TV.
Welcome back. Earlier today I spoke to the CEO of RCL Foods, Miles Daly, about their full year results. Here he is on their performance for the year to June.
It has been a transformational year for the group, which is why we put out the pro forma. Quite frankly, the key indicators in the pro forma are that we put in TSB for the full year. As you know, we only had it for 6 months, but we paid $4 billion through the issue of 230 million shares. We restructured our existing BE and implemented a new BE scheme. We raised 790 million odd rand in a pro rata. We redeemed the Food Corp Euro senior secured notes, and we acquired the 35.8% minority interest in Food Corp that we didn't have. So if you take all of those activities and you strip them out or add them in for a full year, the pro forma would give us a headline earnings of 385 million as opposed to a loss of 332.6 million, which is a 700 million rand swing, which is why we felt it was so important to put up the pro forma. So the pro forma is the best indicator of the underlying performance of our business if you looked at a full year.
Sure. Okay, well, let's talk about the underlying performance, and let's look specifically at Rainbow, which was the kind of the genesis, the nub of this company before you acquired Food Corp and TSB. It's not doing very well, and the operating margin is 1.1%. You've said that this is unacceptable, and in fact you're considering taking an impairment against Rainbow should this kind of performance continue. But this is in contrast to some of the other poultry producers, which seems to be on a better footing now. So what's going on?
Yes, certainly there are a couple of things that have impacted the chicken industry and Rainbow. We've still had high levels of imports. We've still had high levels of feed cost. And then specifically pertaining to Rainbow is the whole question of injection. We took a view that we would cap injection at a level that we were comfortable with, that we thought would give the appropriate levels of benefits to consumers, whereas some of the market does at different levels and therefore has a advantage. Our business is also geared very much to the quick service restaurants, and therefore we have perhaps a slightly bigger cost structure in terms of servicing that sector of the market. So we are comfortable with our strategy with Rainbow, but we're not comfortable with the financial result, and as you say, a margin that's unacceptable at a 1.1%. But we need to look at an impairment on the basis of the poor results, but the board was comfortable that at this point we did not need to raise an impairment against the Rainbow.
How big would that impairment be if you were to raise it?
We haven't quoted that number, but it would be significant.
Okay, so what are you going to do to turn Rainbow so that you don't actually have to take a charge against it?
We've done a number of things in Rainbow where we're reducing the volume. You'll see our volume is actually down. We're trying to get as much of our volume into the weight range that we need to service the quick service restaurants, where we've got a good relationship and a fair margin for our efforts. And we're also saying that we need to get the level playing field. And the level playing fields will come with no product being dumped in South Africa, which is happening at the moment, even though the duties have come in. As you know, that was a general duty originally, and so all the product coming from Brazil then started coming from Europe. Yeah. Now we're in the process of doing the anti-dumping duties against Europe. But a significant amount of imports still came in. And then we need the injection cap to level the playing field relatively. So there's some macro factors, and there's some things that we're doing internally.
Okay, what about Food Corp, and especially given a consumer that's under pressure, and we're seeing this all over the place, how is that doing?
Food Corp was a kind of tale of two halves, in that part of the business performed exceptionally well in spite of the consumer being under pressure, and that was our grocery business, which houses our mayonnaises and peanut butters and pet food. The problem child was baking and pies. And pies, partly through some issues that we have, but secondly, again, it's a very, very cheap food product, and the consumer that it's targeted at is under pressure. And baking, we had some specific internal problems. We've had management changes there now, and we're comfortable that we're getting that back onto an appropriate footing.
Okay. We can't spend too much time talking about Food Corp. I mean, perhaps going to TSB, which is the acquisition over the year. You bought, so you lifted your stake to 100%. Sugar is not exactly an easy business, and we've seen that from the sugar producers elsewhere. Why did you want to take the stake to 100%?
We believe that sugar in the long term is a good category, and particularly in Africa, which is a deficit market. And so we're very positive about sugar going forward. Clearly, in the short term, sugar pricing has been under pressure, and as you know, that is cyclical. But the long-term projections, both from a volume point and from a sugar pricing point of view, are positive. If you just talk specifically about Food Corp's results, bear in mind the impact this year was the fact that we only had it for the second 6 months, and the profits are made by and large in the first 6 months. We have the off-season from January to March, and then we have the impact of the strike, which cost us about 69 million. It's important to mention that 69 million isn't actual strike costs only. That component would be smaller, but we were unable to process cane, and because it went over year end, we'll get the benefit of processing more cane in this financial year.
That was Miles Daly, CEO of RCL Foods. Unfortunately, we've run out of time to chat to Rob, but just to let you know, Santam shares ended 2% down, RCL closed flat, and we'll bring you those full interviews later on News Leader tonight.
Happy 20th birthday, Casual Day. It's time to go posh casual. Dress up, not down. So dust off your dancing to banish the blues. Whatever you do, just bring out the bling to show your support for persons with disabilities. Get your sticker from participating organisations: Edgar's, Jet, Jetmart, Boardman, CNA, Red Square and Legit, ABSA, Game, Dion Wired, ShopRite and Checkers, or at casualday.co.za. Remember, Friday the 5th of September is Casual Day.
With CFDs, I can trade on the rise and fall of a wide range of stocks and the SA40 index.
I use CFDs when I want to trade without putting up the full value of my position.
It's important I can pursue 24-hour trading opportunities and still control my risk.
That's why I trade CFDs with IG, the world's #1 CFD provider.
Traders Corner is proudly brought